I want to ask you about T+1 next year. Those of you who don't know, the U.S. stock market next year is going to go to what we now call a T+1 settlement. So it means stocks will have a settlement date 1 day after the trade is made. Right now, the U.S. stock market has a 3-day settlement period. So this is a big technological change. The market's very preoccupied with this. So I guess, Ben, what are the implications for ETFs and the markets in general?
It's been a big initiative at the bank, and as you said, certainly May of 2024, we're going to see this change implemented. And we service over 1.7 trillion in ETF assets and run a proprietary tech stack to support all these assets and provide that servicing. It's been a huge initiative for us and the industry. What investors really need to know is really probably a couple things. One is, we think the biggest impact certainly is going to be in international equities. So if you think about any markets that will not be on that T+1 market.
Right now, Europe is T+2, right?
Right. So when U.S. moves to T+1, obviously there's a mismatch in settlement, and the potential outcome there is that you could see impacts on liquidity. Because of the way the market structure is designed and the way that the liquidity providers create and redeem ETFs. It also has to do with the FX and the timing of that. But ultimately, we think that the market will adapt and provide, and step in to provide that liquidity. But it is something to watch, and I think it's going to be more, again, on those international ETFs and on an ETF to ETF basis. So again, that's probably the biggest thing that investors should be aware of.
I just want to emphasize, Andrew,
the financing
this is a good thing, going from 3 plus 3 plus T+1. And those of you who don't get confused about all of this, I'll make it simple. You want shorter settlement because this guarantees that you know that you got your stuff sooner. So if I bought 100 shares of IBM, how do I know I actually bought 100 shares of IBM? Well, there's somebody who gets in the middle that guarantees that. But they only guarantee it after 3 days. Now, if you guarantee it after 1 day, what it does is it reduces risk in the market.
It's much more efficient.
What you call counterparty risk in the market.
We've had institutional clients asking us, you can do a T1 trade. I've been doing T1 trades for a decade. And a lot of institutions over time, just more and more for the same reason that you said. They want the security, they want the cash in and out. There's financing charges when that cash is stuck in the middle. Maybe it's not the best thing for some of the banks that don't get to keep that spread for 3 days, but it's more efficient for the client, for sure.
It's certainly in an era of higher rates as well, that financing charges become incredibly important.
Correct.
You mentioned Bitcoin. I got it's the obligatory Bitcoin question, folks, here. We're up 30%. We're 30,000 to 40,000, right? On all of this on hopes for a Bitcoin ETF. What's the timeline for a likely rollout? Either one of you, doesn't matter.
Look, I think it's hard to predict. Obviously, everybody's waiting for the SEC, of course. We are in the process of helping multiple issuers get ready, again, to provide the servicing to power these products whenever they come to market. A lot of signs seem to point, and certainly all the media, seems to point to Q1, whether it's January or some point a little bit later in the year. It seems like we're getting very, very close if you look at all the filings. And, when the market's ready, we'll be ready. And I think to Andy's point, I think we will see a lot of interest for these products whenever they end up making it to market.
Then it'll settle down, though. I think then it'll settle down. You'll get back to everyone saying, all right, what's the proof of concept on the underlying asset class? And then we'll see. But certainly there's a lot of excitement for traders and the traders in those products to be able to reflect their views in an ETF.
I want to get clear about what you guys do, because there's a reason I have Ben on. You're the biggest service provider to the ETF industry. But explain what that means to be a service provider. What do you do? It makes you so important.
Yeah, again, it can mean a lot of things, but certainly the way I like to describe it is we provide the infrastructure to power up the ETFs. And again, as I mentioned, it's over 1.7 trillion of assets. And what does that mean? It means custody. We clear and settle trades. It means accounting.
NAVs?
We value and provide
the trade.
Net asset
you settle,
value.
The point is, when you're looking at the price of your ETF, they're the ones, you're the ones that actually settle on the price.
We are the golden source, for that price. Financial statements and ultimately the ETF creation redemption orders. So when the liquidity providers come to trade any of the ETFs we service, they're coming to our desk, and we're effectively the tip of the spear when it comes to
So there's this gigantic iceberg underneath the surface that you see when you do with ETFs and with stocks too. But you take care of all that stuff to make sure when When you're buying that ETF, you make sure that you're there, making sure what the price is right, calculating the price. You do custodial work too.
Yep.
Now, for the Bitcoin ETF, you're not going to do the custodian work, right?
That's correct. Right. We are simply providing the fund services, ex custody.
Right. Okay. So I know that gets a little technical, folks, but it's an important distinction. Anyhow, the point is, you're the firm that provides all the management underneath for everybody.
That's exactly right.
It's a very important business, actually. It's really the guts of. It's all the stuff you don't see. It's like the plumbing behind the walls at the New York Stock Exchange. Like the place runs on massive amounts of technology, but you never see it. It's all behind the walls there. You kind of, do that kind of service.
Same thing at BNY Mellon.